Hi everyone, welcome to the Streetwise Property Pulse, your weekly resource for Ontario's real estate investing and financing updates, where we provide you with timely updates and perspectives from leading real estate practitioners, answer your burning questions, and share with you valuable tips and strategies. This is Dalia Barsoum from Streetwise Mortgages. Today we are continuing our multi-week series looking at the various investment strategies and how they're operating in the current market environment, including buy and hold, buy, renovate, refinance, rent, student rentals, rent to own, flipping properties, and assignments. On today's episode, we're speaking with Luc Boiron about wholesaling properties. But first, I'd like to share with you a brief description about the wholesaling strategy. Wholesaling is really about picking up a property from a seller at a discounted value or market price because the sale is distressed, then turning around to assign it to another investor for a margin. Luc, welcome. Tell us about yourself and how you work with investors.
Hello, my name is Luc Boiron. I am a former lawyer turned full-time real estate investor. First, I was flipping houses, and then I moved into wholesaling houses, which is essentially when I buy a property and then I assign that to another investor. So I'm usually buying a distressed property from sellers who are either in a bad situation like divorce, inherited properties, etc. And usually the property is quite run down as well. And I'm selling to other investors at a discount who are usually keeping them as rental properties or flipping them themselves. I do this with my team in Toronto, in Ottawa, and Montreal. I actually myself just moved from Toronto to Ottawa last week. And we're buying about 15 houses a month in those markets. If anyone's interested in joining our buyers list, they can go to cashhousebuyer.ca/buyers.
Luc, what are the opportunities and challenges that the pandemic presented for investors who are looking to wholesale a property?
I wanted to touch on the opportunities and challenges that this pandemic has brought to wholesaling. For opportunities, there's been some distress early on. What we found when COVID first kind of exploded and everyone was afraid was that people didn't want anyone in their home. Now, this was a particular difficult time. A lot of things were in flux. So it was difficult to buy properties, but after a few weeks, people, were still willing to sell. And one of the ways we made that work was we were going with sellers on FaceTime in their home. So they were showing us the home over the phone, and then we would sign a contract over DocuSign and then schedule one visit down the road to actually view the property ourselves and take detailed pictures. But we wouldn't actually put the property under contract by seeing it ourselves. We would have the seller see it. So, but that opportunity was kind of because everything was in flux. People were afraid if they lost their job, they were afraid they might need to, not be able to make their mortgage payments. So they might come to us preemptively and say, will you buy my house? I need to find a rental for a bit or move to something smaller or less expensive. And also just people might have been afraid that the market was going to crash. And so they might have called us and say, I hear you buy quickly, come buy my house quickly because I want to sell now before the market falls. That didn't happen, luckily. Challenges on the other side were that many of our buyers, the people we assign our contracts to, they were a little bit afraid of what was going to happen, and rightfully so. In hindsight, turns out the market's hotter than ever. But at the time, I understood why people were concerned to be picking up new rental properties, not sure where the market was going to go. There was also a lot of private lenders who were afraid to lend their money at the time. So financing was drying up because rates were so low. Traditional mortgage brokers or traditional lenders, they were lending, but there was a huge backlog to actually get loans. And then the private lenders were kind of like, well, let's hold off, let's wait and see what goes on with the market because we want to make sure our equity is secure. Again, that was a bit of a challenge. So even when we got a good deal, the first few weeks, couple months of the pandemic, there was a little bit of it was a little bit more difficult to assign the contract. So we needed to buy at a deeper discount in order to be able to assign it and make our kind of regular spread on the property.
Luc, what are the risks associated with investing in wholesaling a property? And what tips can you share with investors to mitigate these risks?
Now I'm going to speak about the risks in the current market conditions in regards to investing in assignments and how to manage those risks. So a risk you have right now is because of the volatility in the market, the prices may change. Some assignments have very short closings because sellers want to move quickly, and some have very long closings, sometimes 3, 4, 6 months away. So a risk that you might have is that you waive all of your conditions, you are now firm in the deal and legally obligated to close, and that your buyer doesn't close. That is one of the largest risks you can take. For example, if you buy a property, I myself might put a small deposit down, but regardless, I'm committing to close on the property, and I can be sued if I don't. And if I assign this property, as particularly if I'm not relieved of liability in my assignment clause, and my buyer doesn't close, I can then be sued by the seller for not closing. And that might happen if the seller is, a newer person, they don't have much, net worth to their name, and they're looking to get 100% financing, and the price of the property falls. Let's say things do change. I don't expect them to, but let's say things do change in the market. Prices go the opposite way. They start falling. Well, the buyer is going to try to look for reasons to back out. If the property actually falls a lot and is suddenly worth less than they're paying for it, they can't get their 100% financing or whatever else they're looking to do. They're hoping, or if their deposit's very small, they might have a risk. So a risk might be a small deposit. If the buyer is buying under a corporation, it's more of a shell company that's never bought anything before. There's no assets in it. So you're not actually, you don't have a guarantee from any individual person with assets. Or even if you do have an individual person, that there's someone who doesn't actually have much net worth to themselves. There's not much to go after in them. They might be a newer person, hoping to borrow all of the funds to close on the property. So how do you manage these risks? Well, for one, we start by putting a condition in on our clause that allows us to assign it. And once we have assigned it, that we are relieved of all liability. Now, further than that, we have a conditional period that might be financing, it might be inspection, but it's conditional to get for a certain period of time. And during that time is normally when I would assign it to another buyer. So I wouldn't typically just close on or firm up on the deal right away, not knowing if I have somebody interested in purchasing it, because then I'd be committing to closing it on myself. So there's those clauses. And then I would vet the buyers that are going to buy it. I would look for, maybe someone who I know, who has a good reputation, who can put a large deposit down, who isn't buying it in a shell company, or if they are, they're also personally signing on the agreement. And really just don't go firm on one of these assignments if you aren't sure that your buyer is going to be able to close. Find a way. Now, if it's a buyer you haven't dealt with, who maybe doesn't have as much backing them, make sure you get a larger deposit on it. It's going to hold their feet to the fire a little more to ensure they close and that you're not at risk.
How do you expect the wholesaling strategy to perform given the economic outlook?
Next, I wanted to talk about how I anticipate the assignment strategy to perform given the economic outlook in the future. Now, things are quite uncertain with COVID. The market is going up like crazy, and that may continue for the next little while. At the same time, we have very high unemployment levels, people coming off of CERB. So it's uncertain whether the market might go down in the future when some things change, like mortgage deferrals. I personally don't see the market going up forever, but I do see it for the next while going up. But regardless of where I think the market's going to go, there's two main parts to assigning contracts, right? To doing this assignment strategy. You have to buy the property at a discount from sellers who have some sort of motivation to sell, and then you have to sell the property to buyers who are, usually investors who are looking to invest. So in good markets, as the market is going up, it becomes more difficult to buy. Sellers think that they can just snap their fingers and they'll be able to sell their house for $1 million. So that makes it very difficult to buy the house at a discount. However, if you are able to buy those houses, there's a lineup of buyers who want to buy those from you as well, because you're also selling them at a discount. They're already having trouble buying them at market rate on the MLS. So if you can get those properties in that market, you'll be able to sell them very well. Now, if the market doesn't do well, you have the opposite side. It's very easy to buy properties, but it's very hard to find investors who want to buy in a falling market. So in that case, you have to do two things. You need to buy at a deeper discount to incentivize buyers. And then two is you have to be very good at selling your properties. And part of that is to focus on having good relationships with your buyers and an excellent reputation that you know what you're doing and that you're honest. So if you, right now is an upwards market. If you can buy a property, get a discount, there's a good chance you'll be able to sell it, assuming it's really a good discount. In order to keep this sustainable, if the market doesn't always continue going up, you have to make sure that you hold yourself, accountable. You work with integrity, and that people can trust what you say you're doing with your property. So if you say this is a good property, people trust it. So I think this strategy can work in either an upward market or a downward market. You need sellers who think it's hard to sell their property, and you need buyers. The best time to buy is when sellers think it's hard to sell their property. The best time to sell is when buyers are having trouble buying properties. So you're always at a crossroads. If you can get good at both sides of that, you'll be able to operate in any economic climate. Thanks so much for listening to me on this, and thanks, Dalia, for having me.
Luc, thank you very much for being with us today and for the valuable tips that you've shared with us. In regards to financing wholesale properties, most lenders would go by the price that you purchased the property for, not what the property is worth. As mentioned earlier, when you purchase a wholesale property, you're buying a property below market value. So most lenders would finance based on the lower of the purchase price and this market value. However, there are a few lenders on the street that would finance the property based on the appraised value, which essentially means that you're buying this property with less money in the deal. That's it for today. To get notified of our episodes, please subscribe and hit the bell button. I'll see you on the next episode.